In 2021, one stuck cargo ship blocked the Suez Canal for 6 days. Just 6 days. It took the global shipping industry 4 months to fully recover. Grocery store shelves felt it, car manufacturers felt it, fuel prices felt it, and that was just one ship sitting sideways in a canal. Now imagine something bigger, something faster, something that didn't get stuck, something that was aimed. That is what we are walking through today. And by the time this video ends, you are going to understand why analysts, oil traders, and defense officials consider this one of the most dangerous scenarios on the planet right now. This is Crisis Capital, and today we go deep. Let's start with the target itself, because most people genuinely do not understand how important Dubai International Airport is to the way the modern world functions. This is not just a big airport. It is the single busiest international air hub on Earth. More international passengers pass through Dubai every year than any other airport anywhere. It sits at the geographic center of the world. You draw a circle with an 8-hour flight radius around Dubai, and you cover more than 2/3 of the entire human population. Every major airline routes through here. Cargo from Asia moves through here on its way to Europe. Medicine, semiconductors, fresh produce, auto parts. Billions of dollars worth of goods move through Dubai's terminals and cargo facilities every single week without most people ever thinking about it. It is invisible infrastructure, the kind of thing nobody notices until it stops working. And that invisibility is exactly what makes it so dangerous to lose. Now here is the geographic reality that military planners think about constantly. Dubai sits approximately 240 kilometers from Iran. To put that in American terms, that is roughly the distance from Washington, D.C. to New York City. In the age of modern long-range drones, that distance means almost nothing. It is not a buffer. It is not a safety zone. It is a short flight for an unmanned aircraft that costs less than a luxury SUV and can be guided with commercial GPS technology. This is not speculation. Iran has demonstrated, publicly and repeatedly, that it possesses exactly this capability. The world got a very clear preview of what this looks like in September 2019. That was when Houthi drones, armed, supplied, and guided with Iranian intelligence and Iranian technology, struck the Abqaiq oil processing facility in Saudi Arabia. Abqaiq was not a soft target. It was one of the most heavily defended pieces of infrastructure in the Middle East, processing roughly 5% of the world's daily oil supply. And the drones got through anyway. Within hours, Saudi Arabia had lost half its oil production capacity. Within hours, oil markets were in shock. Brent crude jumped nearly 15% in a single trading session, the largest single-day oil price spike in recorded history. And that was one facility in one country knocked offline for a matter of weeks. Now scale that up, now point it at Dubai. The fuel storage and operational infrastructure of Dubai International Airport represents a concentrated, high-value target. A precise strike on fuel storage does not just create a fire. It creates an operational shutdown. You cannot run the world's busiest international airport without fuel. You cannot reroute those thousands of daily flights quickly. The global aviation network simply does not have the spare capacity to absorb a sudden disappearance of Dubai from the map. Airlines that use Dubai as a hub for connecting flights between continents would be scrambling within the first hour. Passengers in transit would be stranded. Flight crews would be out of position. The whole carefully choreographed schedule that makes modern aviation work would unravel in real time. This is what a calculated strike means. And this is why Crisis Capital uses that phrase deliberately. It is not random. It is not theatrical. A strike on Dubai Airport is not designed to kill people. It is designed to send a message to every government, every financial market, and every supply chain manager on Earth simultaneously. The message is simple. Nothing is safe. Nowhere is too important to hit. And if you thought the rules of engagement still protected civilian infrastructure at this scale, think again. Now, let's talk about the question everyone would be asking within the first 30 minutes of such an event. Who did this? And why now? The honest answer is that the list of actors with the technical capability and the potential strategic motivation is not long. Iran sits at the top of that list for reasons we have already covered. Proximity, demonstrated drone capability, and a years-long pattern of using proxy forces to strike Gulf Arab infrastructure without direct attribution. The Houthis in Yemen, who receive weapons and guidance from Iran, have already struck the UAE. In January 2022, Houthi drones and missiles hit an oil facility near Abu Dhabi, killed 3 people, and briefly rattled global markets. That attack happened. That precedent exists. And since that attack, the technology has only gotten better and the regional tensions have only gotten worse. But here is the strategic layer that goes beyond just Iran versus the Gulf states. The United States has an enormous military presence in this region. The Fifth Fleet is based in Bahrain. American air assets are spread across Qatar, the UAE, and other partner nations. Washington has consistently and publicly stated that it will defend freedom of navigation through the Strait of Hormuz. the narrow waterway through which roughly 20% of all globally traded oil passes every single day. Any major military escalation in the Gulf puts American forces directly in the crosshairs of a potential response calculation. And recent American policy signals have made the situation considerably more volatile. Threats around the Strait of Hormuz, blocking it, mining it, or targeting the ships that pass through it, are not new. But the combination of a more aggressive American posture, continued Iranian nuclear program advancement, and the precedent of successful strikes on Gulf infrastructure creates a situation where the margin for miscalculation is smaller than it has been at any point in the last 2 decades. Military analysts describe this as a high-tension, low-warning environment. Things can move from a single incident to a regional crisis faster than diplomatic channels can respond. And when things move fast in the Gulf, oil markets do not wait for diplomats to catch up. Let's talk numbers, because this is where the scenario connects directly to your life, regardless of where you live. When Brent crude, the global oil benchmark, crosses certain price thresholds, it sets off a chain reaction that touches every sector of the global economy. Above $100 per barrel, airlines start bleeding money on fuel costs and passing those costs on through higher ticket prices and fuel surcharges. Shipping companies do the same, trucking companies do the same. And when every link in the transportation chain gets more expensive simultaneously, inflation does not need a formal trigger. It just arrives. At the grocery store, at the gas pump, in your electricity bill, in the price of every manufactured good that had to travel to reach you. Analysts who model Gulf escalation scenarios have consistently found that a credible, sustained disruption event in the region, the kind that markets interpret as a sign of prolonged instability rather than a one-time incident, can push oil prices significantly higher within days. Some worst-case projections under severe escalation go considerably above $120. At that level, central banks face an impossible choice: raise interest rates to fight inflation and risk crushing economic growth, or hold rates and watch purchasing power erode. There is no good option. There is only damage control. Now here is the dimension of this story that almost never gets covered in Western media, and it is the part that crisis capital thinks is most important for understanding the full picture. Southeast Asia, countries like Vietnam, Thailand, Indonesia, and Bangladesh. These nations are not actors in the Gulf conflict. They have no influence over what happens between Iran and the United States. They have no hand in the decisions being made in Tehran or Washington or Riyadh. But they are deeply, structurally connected to the same supply chains and the same energy markets that a Gulf disruption would shatter. Vietnam imports significant amounts of refined petroleum. Thailand's aviation sector depends on jet fuel priced in global markets. Bangladesh's garment industry, which makes clothes that end up in American and European stores, runs on energy that is priced relative to global oil benchmarks. When Gulf oil prices spike, these countries absorb costs they cannot control and cannot easily pass on. There's a phrase that risk analysts use: when the Gulf sneezes, Southeast Asia catches a cold. But in a major escalation scenario, the kind we are walking through today, that cold becomes something far more serious. We are talking about flight reductions, export disruptions, currency pressure, and real economic hardship spreading through countries that have no seat at the table and no ability to negotiate their way out of the consequences. The global economy is not a collection of separate systems. It is one system. And the shock travels faster than most people expect. Now step back and look at the full picture, because this is where crisis capital wants you to sit for a moment. We have a single infrastructure target, Dubai Airport, that connects aviation, cargo, oil markets, currency markets, consumer prices, and geopolitical stability in ways that compound on each other. We have a regional adversary with demonstrated drone capability and a history of striking infrastructure. We have a superpower with enormous military assets in the region and a policy posture that has become more confrontational. We have proxy forces that have already shown a willingness to hit civilian and commercial targets. And we have global supply chains that are still fragile after years of pandemic stress and have never been rebuilt with resilience as the priority. This is not alarmism. This is the actual risk landscape that insurance companies price, that hedge funds hedge against, that military planners wargame on a regular basis. The question risk professionals ask is never, could this happen? The question is always, how prepared are we when it does? And the honest answer, looking at how interconnected and how brittle the global system has become, is that we are less prepared than we should be. Here is what makes this moment particularly significant. The technology of conflict has fundamentally changed. A drone that costs $50,000 can strike a target worth $50 billion. A small group of actors with modest resources and good intelligence can project force in ways that were previously only available to nation-states, with large conventional militaries. That asymmetry, a small investment creating an enormous impact, is what defense planners call a force multiplier. And it means that the traditional logic of deterrence, the idea that overwhelming military superiority prevents attacks, does not work the same way it used to. You cannot deter a $50,000 drone with a $1 billion air defense system if the drone finds the gap. That is the new reality of the Gulf. That is the new reality of global infrastructure security. And that is why this scenario, Dubai, drones, oil, supply chains, Southeast Asia, is not a thought experiment for specialists anymore. It is a practical literacy that every person who wants to understand the world they live in needs to have. At Crisis Capital, we believe that. We believe that the gap between what is happening in the world and what most people understand about the world is not a knowledge gap. It is an access gap. The analysis exists, the modeling exists, the expert opinion exists. It just does not always make it out of the conference rooms and into plain language that actually helps people think clearly. That is what we are here to do. So here is what I want from you right now. And I genuinely mean this. In the comments section below this video, tell me one thing. What part of this scenario worries you the most? Is it the oil prices and what that does to your daily cost of living? Is it the supply chain disruption and the shortages that follow? Is it the potential for a direct military confrontation between the US and Iran dragging the world into something much larger? Or is it something I haven't even mentioned? Maybe the fact that one drone, one single piece of technology that costs less than a car, could be the domino that starts all of this. Write it below. The most interesting comments, the ones that push the conversation forward, I respond to directly. And the best ones might even shape what we cover next. If this kind of analysis is useful to you, if you came into this video not fully understanding how connected Dubai Airport is to your grocery bill or your fuel pump, and now you see the thread, share this video with one person, just one. Someone in your circle who pays attention to the world, who wants to understand what is really happening beneath the headlines, because informed people make better decisions. That has always been the point. That has always been what Crisis Capital is built around. Subscribe if you are not already. Hit the bell so you do not miss the next analysis, because this situation in the Gulf is not resolved. It is not cooling down. If anything, the signals we are watching suggest the opposite. We will be here when the next move happens, breaking it down, putting it in context, and making sure you're not caught off guard. Information is power. Strategy is survival. And we will see you in the next one.